All right, this is followmetrades.com Real Traders Club training time on Wednesday, September 15th, 2022. And Eva is going to be doing our training this morning, and she's going to talk about reward to risk ratio, why it's important and how we do it. So Eva, take it away.
Okay, good morning, everyone. Why is risk to reward important? Because it makes your winners big and your losers small. Not every trade is going to be successful. So if you have a risk to reward, you have a stop, your risk is going to be much less if it hits the stop than what your reward would be if it actually works out the way the probability was going to and you make a good profit. So basically, I'm going to show some examples, but there is this nice, sorry, I hope it's showing. I don't know if I hit the share. Is it showing?
Yeah, we see the spreadsheet.
Okay, so there's this great spreadsheet. Dean's much better at getting to things and showing shortcuts to how to find everything. So he can do that after we get through everything. But this is a great calculator. Usually you can visually tell, but when things are close, it's good to use this. This also, you can put in your account size, the risk, 2% usually the most, but sometimes, let's say in a volatile market, you want to say it's only 1%. You want to risk less. So you can change to parameters, determine the number of shares to buy and all that. And the end result, what we're doing today, is this box here, the risk reward. Now, the minimum is 1.2. That's on the low end. You would want to only take these lower end risk reward ratios if you felt the probability is really strong. So the math behind this is the profit at the target. It's going to equal the target minus the entry. The loss at the stop is the entry minus the stop. And then the risk reward ratio is the potential target divided by loss at stop. But instead of just sitting there talking, throwing out formulas, let's look at some examples. That'll make it easier. And then I'll pull back this calculator as we are looking at them. So let's start with Costco. This is a short. We actually had this on the watch list as a long. I said we might be converting this to a short. And in my book, this is triggered as a short. So because of this market, traditionally, we would put the stop all the way up here. With the market being as volatile as it is, I'm not willing to do that. And we also had the golden cross. So there's some concerns there, but it has come down. It's come out of the cloud. It appears to be heading down. We have nice pyramids. The owl's turning red and growing. So I like the setup for a short, but I'm going to tighten my stop. I don't want it to go back over the 200. I'll let it get a little bit into the cloud to reverse, but I'm not going to let it get too far. So that's the reason why I selected that. And the stop, it's still in the same spot I picked, so that's good. Entry has changed a little bit from when I put in the numbers, so that real quick. It's 508.30 now. And then the target I have is down here. This was a reversal area. It could go down to this prior low, but I like this. It's a nice spot in the retracement. It's also a previous reversal point. So that's why I selected that as my target. So with all that, let's bring this. Let me see if I can squish it so we can see a little of everything. Trying to get it all on, but still see the, okay, so entry, now the entry keeps changing. So it's 508.42 now. The stop, 517.63, which is the red line here. the target, this line here is 443.48. Well, when you put all that in and you want to use, because we're doing a short, so you want to use the short side, risk reward 7.05. So that looks pretty good. Let's say you don't think it's going to go to this reversal point. Let's just, let's do some hypotheticals. Let's say you only like it to 483.96. That would be a conservative target. So 43.96. You still have a 2.66. So even with a conservative target, this is good setup. So I actually have it triggered on the watch list, and with the stop, the entry, the targets all listed. Okay, so let's go to another. Let's do a long NCLH. Another one that triggered. I decided we might as well use the ones that triggered today. Norwegian Cruise Line. We're watching this. It's up 4%. We've had a couple big days, so you may have some concerns because it's getting to this consolidation area. So understand that. You may want to wait, and I get that. But if you're aggressive, it's made some nice moves, and I've got two possibilities here. So again, this was a prior low, so the stop's going there. It's gone up a little bit more. This is a conservative target. Now, it's going to be a little harder. Grow it a little bit. All right. I think if we do it and keep it this way, we'll be good going forward. We won't have to waste any more time. Okay, so if we're going to go with the conservative target, that's at 1739. So you would enter that in. Your stop, 1375. Your entry right now has changed, so it's 15.68. All right. So in this scenario, if you really feel that the conservative target is the realistic one, you wouldn't want to take this trade, 0.089. If you feel strong that it's going to be heading up into the retracement, and this is an area it's hit, third time, if it has some momentum to be heading up there, you would put the target at 23.35. The stop stays the same. The entry is the same. What changes now is a risk reward, 3.97. So again, you have to look at this. This calculator works for no matter what your trading style rules are. If you're more aggressive, you just put the numbers in. You see if there's risk to reward. If you're more conservative, again, as I showed here, maybe you don't feel strong about it getting all the way up to here, but you think, well, it's going to at least hit the retracement zone. Just throwing out a hypothetical. Let's put in 1949. That is somewhere in between. This might be for those who are more aggressive. This is more conservative, somewhere in between. So again, I may even change my target to that one.
There's a point to be made there. What you don't want to do is move the target to make the reward to risk ratio work. Figure out what you really think the target is, and then do the math. Right? Yeah,
I'm just trying to show hypotheticals. Absolutely. Sorry, depending upon what is your approach. But you really, as Dean says, you can't be like, oh, I like this so much. Let's see, I don't like it here. Let's move it up here. You got to look at it, set it up, and then put the numbers in the calculator to see if it works. So thanks, Dean. That's a good point to make. Sorry, I'm just trying to show different scenarios, and it may not have come off as well. All
no,
right.
Absolutely. I just didn't want anybody to
think you can move it around.
Yeah. Let me just keep moving the target until the numbers work.
Yeah. Okay, this is a trigger we had earlier this week on General Motors. And, it pulled back. It did not hit the stop. Found support in the cloud, is reversing. I still like the setup. So these are the numbers I stuck in originally. So let's put them in. Entry was at 4206. The stop is 39.56. And the target is 4623. 1.67. So this was taking a very conservative approach, but it met the parameters over 1.2. It could go higher, which wouldn't be a problem, which would give you more risk to reward. But we've been taking more conservative approaches in this volatile market. There's a chance this could reverse here. There's no guarantee things are going to keep going up. It just looked like a really nice entry. It had momentum. It was growing. A lot of reasons. The chart reads well. So a lot of reasons for having this trigger. But not every trade succeeds. Some fail. And that's why we set a stop here so that your risk would be minimal compared to what your potential reward is, which is this space here. And that's why I said when you set up your chart, put the lines in, you can visually see that you're more than a 1.2 here. So you don't always have to use the calculator, but the calculator helps you determine number of shares to buy, all that, if you're buying shares. A little bit different when you're buying options, but let's move on to another example, Starbucks. So Starbucks, big day, reverse. I still have Starbucks as a yellow. I wanted to just make sure it gets back up here. It's finding support, pulled back a little bit, finding support, reversing. Now let's just say this works, and it's triggered. If this is a conservative target, you can pretty much tell that's not going to work. Let's just go through real quick. 99.42, 8805, and entry is 9290. All right. It does, technically it's over 1.2. You would have to feel really good about this trade, the probability that it's going to get to this conservative. I think if it does have the momentum and it keeps going, for the primary fact that it hasn't crossed over the 200 simple day moving average for quite a while, that the momentum keeps heading up, this is less important than being over this line here. So I would say, in my mind, the probability is pretty good. I just want to make sure at this point it gets through here. And then I think it could go much higher than that. Just my feeling, looking at the chart, looking at all the factors weighing into that decision. I have one more short to show before we switch to the and end the training session for the day. I want to get this over. Still shrinking it. All right. So CSX, it's retreated a little bit. It was right there this morning. So tentative agreement, I might stay out of CSX just for the fact that it might be coming down because of the possible looming strike. However, there's possible resolution to the strike, and it's still heading down. So I like the fact it's triggered. We do have a gap here to be concerned with, but there's a gap here. That's why I put the stop there. Entry's now here. Target's the prior low. Let me see if I got those numbers written down right. The entries just changed, 3080. Okay. Let me pull over the calculator. And we'll stick those numbers in. Okay, so entry for the short is 30.80. The stop is 31.54. And the target is 27.90. All right, 3.92. So this one I have is a yellow because I'm kind of waiting to see what happens today. The White House said the tentative agreement, but the union still has to vote on it. So I'm not sure, the market is excited yet about it because it is heading down still today. But with that, once we said, use this, bring it back over again, use this stock trade calculator. It is your friend. It helps you if things are close. It will help you see very easily without having to do all the mathematical calculations that I explained before we got into the chart. So again, 1.2 would be your minimum. But if you wanted to go that low, you'd have to feel very good with the probability that the chart, either wave 4, wave 5, the probability was very strong. So hopefully that has explained risk to reward and the importance for doing it. So you can make your winners big and your losers small.
All right. Good job, Eva. And thank you. And that's the goal, right? In order to have your winners be big, your losers small, you got to have trades that have the potential to be bigger winners. And that's why we go through the reward to risk. And you hear us say it every day when we're looking at a chart, well, we got reward to risk or we don't have it. And so hopefully that was helpful to see kind of the nuts and bolts and math behind that. If you want that calculator, that spreadsheet that Eva was using, you just go to the homepage, followmetrades.com, under methodology, risk management. Here on the menu, you scroll down and that calculator can be downloaded right here. And you can just put your own numbers into it. And of course, on the stock and option picks page, where the trades are posted, we have the same formulas, hardwired in, so you can see the current reward to risk and how many shares to trade, etc. You are welcome. All right, so that's today's training. And again, thank you, Eva.
You're welcome. And if you have any questions, you can ask them now, or you can ask them when I'm looking at charts in a few minutes.
Yeah, and of course you can post a question in the forum, and we always watch that and we'll answer that.
I just wanted to, the Costco trade is not a Dean trade. It's a watch list trigger that I'll show you when we go back to the watch list. I marked stocks that triggered, and I'm putting their entry, their stop, their target. With Norwegian, I have the conservative and the other target listed. And then, you can use that, fit that information into your own trading rules and see if it works.